exist, and how do you get the perfect business loan for you? That's exactly what we're about to dive into during today's training. You're going to learn exactly how to know how to find the best business loan for you. I mean, the one you can really get, the one you can really qualify for. And we're even going to have a look at kind of the graduation of loans so you can get the ultimate loan for your business as you continue to grow and scale. So we're going to take a look at where you are now, the best loans for you now, and how to get to the best loans that exist in the business space as well. And by the end of this training, you're going to know the exact funding you can get right now for your business and know the exact steps to graduate to the ultimate funding you probably really want for your business as well. So first of all, what is a perfect business loan? Well, it meets your financial needs. It actually gets you the money you need for whatever purpose it is that you want to use the money for. Sometimes you need money just to launch and start a business. Maybe it costs more than you thought it would to actually get the business off the ground. Or maybe you're trying to grow. Maybe you want to get in and start scaling responsibly where you can actually put money into ad spend and increase money that you're spending on a regular basis so you actually bring more customers in the door in a really predictable way. Or maybe you want to open another office, another location, expand your sales team. Any of these things are just some of the significant amount of needs that business owners have. And that's the first thing you really want to figure out is you got to have a loan that actually meets your individual needs. The second is it's got to be easy to qualify for. And this is really what I spent the last 2 decades of my life trying to be able to figure out and then teach to you is how do you easily qualify for money? And what you're going to find today is it's actually way easier than you think it is to qualify for a lot of kind of financing if you know the kind of financing that you're matched with that works best for you. You can typically qualify fairly easily. But if you don't understand the funding that you really can match well with, then you're applying for stuff you just can't get. And that's what creates headaches and frustrations. We got to overcome that. So we're going to figure that out today. You also need to get great rates and terms. You have to be able to afford it. And the more you can, the better rates and terms you get, the more money you can get and afford to actually have. I mean, literally, I've gotten a $75,000 loan in the beginning of my business and paid twice as much as a $325,000 loan later in the business. So how can I cut my payments in half and get an extra $250,000 in financing? Well, that really comes down to you being able to find the best financing for you. And we're going to take a look at that today as well. By the way, if you're just coming in, give me a shout out. Tell me where you're from. I always like to know what your industry is and where you actually are. As a matter of fact, if you tell me your business name, I'll even give you a shout out and get you some attention with everybody that's in the stream. Okay, so first of all, the problem is that you got to figure out if you can qualify. And this is where I see so much frustration from entrepreneurs is that we're out applying for funding we just can't get. It's pie in the sky stuff. We get something we see online. A friend tells us of something. It sounds so good. And we're out there trying to apply for stuff that we can't qualify for. So to find the right business loan, the perfect business loan for you, it's got to be something you can actually really get approved for. At the exact same time, you have to know where to start. You have to know the kind of funding to actually look at because there's so many different types of financing now in the space that you don't want to waste your time applying for stuff that's not the right fit for you. And then there's even such a thing as a perfect business loan. The great news is there absolutely is, but it's not the perfect loan for everybody. What happens is there are perfect loans for each individual business owner in each scenario. How long have you been in this? What industry are you in? What do you need the money for? How much money do you need? There's so many variables that make the perfect funding for you very subjective. It's going to be perfect for you, and what's perfect for you probably isn't perfect for me or somewhere else. So again, there is such a thing as a perfect business loan, but we got to find the right fit for you. So the answer is yes, you can get a perfect business loan. Depending on your situation, there's a lot of different options out there. And if you don't meet the qualifications for one or a lot of different kinds of financing, there's still a lot of options you can. And this is one of the most interesting things I've learned in 2 decades of diving into this, is that a lot of business owners apply and get denied. And they lose hope. They get frustrated. They give up. The reality is that shouldn't happen happen because on the other side of the coin, what got you here is persistence. It's, getting to a point where you're willing to work through the struggles to be able to succeed. You do that as an entrepreneur. You can't be an entrepreneur if you don't do those things. But that's the same thing in the funding. The reality is there's a lot of options that could probably work for you, but you don't want to get frustrated trying to apply for financing qualifications. You just need to find the right option that does work for you. That's what makes it perfect. Is it's perfect for you because it's money you can get, money you can afford to get, and it also gives you the money and the financing you need to actually accomplish the things that you're trying to accomplish. So what are we going to do? Well, first we're going to determine your lendable strengths. Okay, there's a formula that lenders use to determine if you should be given money or not be given money. And we're going to look at that today to look at how they're looking at different strengths that you individual or your business may have. And when you know where your strengths lie, then you're able to then go get financing that focuses on that strength. And if you don't have these strengths, then we're going to talk about how to build an asset that does make you lendable. So if you're not lendable, how do you become lendable? We're going to talk about the fast as well. And we're going to look at, do you have cash flow that's consistent? Do you have good personal credit? Do you have business credit? Do you have something you can leverage as collateral? These are these main silo cylinders per se of business funding. Do you have cash flow? That opens up a whole bunch of funding for you. Maybe you're a startup, you don't have cash flow. Well, then do you have good personal credit, or do you have good business credit, or do you have some kind of collateral? These are all different strengths that you as an individual or your business may have, all of which open up lending opportunities, and some of which, like business credit, anybody can build. Even if you have anything else, you're still able to build a strength to actually make your business fundable, where your business can fund itself. We're going to talk about that as well today. So again, if you don't mind, tell me where you're coming in from. Give me a shout out. I always love saying hello to everybody. Can I get the best quote for a $100,000 US loan? We'll talk about that today, Captain Peter Damer. We're going to discuss that because, again, the hard thing is that based on a comment here on LinkedIn, I don't know what the best business loan is for you, but you're just trying to know exactly what it is. And I would like to get my on a Sprinter van. We're going to talk about that today, Jeffrey, because that is something you can get specific financing for. It's not even financing you have to get a general loan or a credit line for. There's all different kinds of ways you can specific financing for that. And I will talk specifically today about at least 3 options that will work for you to be able to get that Sprinter van. So let's talk about the best business loans. What makes the best business loan perfect? Well, really it has to do with SBA. SBA loans are the best loans out there. And the reason for that is that SBA guarantees in case you default. So if I'm a bank, like Bank of America, then first of all, the problem with big banks is that big banks are federally insured. It's a blessing and a curse, right? It's a blessing because that's what keeps our money safe. We can be into banks and know that we're going to be able to get our money out of banks. But the problem is that because they're federally insured, they're very restrictive on what they're allowed to do. They can't really participate in risky lending. They can't be doing all the subprime loans, the high risk stuff. That's just not where Chase and Bank of America, the big banks, they can't lie there. So the problem with that is that it's hard to qualify, but the great loans there because SBA guarantees loans in case of default. So Bank of America, they're federally insured. They can't lend to just anybody. They have to be very conservative of who they lend to, very restrictive of the people that are allowed to lend to because they can't really participate in risky loans. So that makes it almost impossible for them to lend to business owners in most cases. Now, in comes SBA. And SBA says to Bank of America, hey, lend this person money, and we'll guarantee upwards of 90% in case they default. So based on just general math, Bank of America lends you $100,000. You don't pay the bill. SBA gives the bank 90,000 of that 100 grand. So the risk is now so small to the bank that now they can participate in that loan because SBA takes the majority of the risk because they're getting a loan. So what happens there is because of that, you get really great rates and terms. The lender is willing to lend you money with great terms, longer payback terms, and lower interest rates because they know if you ever don't pay them, they can go get the majority of it back from SBA. It's like having collateral, and SBA is the security. They are the collateral. So the benefit you get of that is great rates and terms. Now, what do I mean by that? Well, this is one of the most important things you learn about getting money, is that when it comes to getting money, you want to get the longest term you can get. That is the primary driver of monthly payment, right? Because if you're going to borrow money, what you care one of the most, if the most, is what are your payments? Can you pay these things? Can you pay it back? Are the payments going to be low enough for you to be able to pay it back? Well, in order for that to happen, a lot of business owners get caught up on, but where you should get caught up is the term, because the term is way more important than the interest rate, meaning that you can get a really high interest rate in a really long term, or you can get a really low interest rate in a short term. And if you were given those two options, you'd almost always choose the higher interest rate in the longer term. And for that is your payment would be way lower, and you write off the interest anyways. It doesn't matter what you pay. If you can afford the payment, the interest rate's 10% or 100%, you get that money back on your taxes as tax deductible. So what we care about is affordable payments, and what makes affordable term payments are longer terms. So SBA loans are 15, 20, 30 terms. So because the term is so long, these are the loans that everybody wants. And the interest rates are typically pretty low, 3 to 8%, depending on like what's happening with the Fed rate, right? What's happening with what we call the prime rate. So about 3 to 8%, that's pretty low in the lending space, especially with a very long term. So let me give you a simple example. And I started the training with this. The first one I got was a $75,000 loan for the business, and it was like 3 years. I think no, it was actually less than 2 years we had to pay it back. So our payments were $9,000 a month to borrow 75 grand. $9,000 a month we paid to borrow. Then we get $125,000 from SBA. We got a long loan term. I don't remember, it was between 20 and 30 years. And then our payment was about $4,000 a month. So our payment was $4,000 to borrow $325,000, and our payment was $9,000 to borrow 75 grand. The difference there is term. Actually, our interest rate wasn't that much different between the two loans. The difference is one was a 3 or 2-year term, one was a 20+ year term. So the 10x longer term helped us get lower payments. And this is why the best loans you're going to get are SBA loans, because the loan amounts are larger. The loan term is longer, and the interest rates are smaller. Now you go and get great rates and terms from banks. Okay, and that means that just because Bank of America lends money using SBA loans, they actually lend money themselves that's not guaranteed by SBA as well. So a simple example here is that we do business with Regions, and we just went and got a big $300,000 plus loan from Regions. And with that, we can get those loans from Regions without it being SBA guaranteed, because we have enough banking history. They see how much money we have in the bank. They know the collateral, all these kind of things. So it is possible to get bank loans from your bank that are not SBA guaranteed. And so what we learned from this one slide is that the best place to get money, honestly, the best money, the best terms is your bank. But it takes a lot to get there. You have to qualify. And you have to have what I call the 3 C's, cash flow, credit, collateral. You have to verify cash flow for the tax returns. That revenue needs to be going up, and you should be showing profits. You need to have very good personal credit and very good business credit. I personally have seen business owners get denied with 780 credit scores, one late payment on a major account. I think the account was on Bank of America. So you've got to have good personal business credit. And 3, you have to have collateral equal to the amount you're borrowing. Maybe it's stocks, bonds, 401ks, raise account receivables, inventory. You have to have assets equal to the amount you're borrowing. So most business owners don't get here 5 plus in business. You got to be in business years to really get the best loans that you're going to get from your bank. And let's be honest, that might not be applicable to you. It probably isn't. But now you know where you want to graduate to. You know the kind of loan you want to get. You know what it's going to take to get there. And you know why you want it, because it's going to give you the best loans at the best terms. But again, the problem is you have to provide a lot of documentation. You got to have the cash flow. You got to have the credit. That clock. So it's just not something that works with early stages. So what does work when you don't have excellent personal credit, great business credit, all this tax returns and profits and assets? I mean, a lot of people hear that and you may say, well, if I had all that, I would. Yeah, you would. Okay. There's a reason that Apple has $100 billion debt. There's a reason that Walmart has 500+ trade lines on their credit report. The bigger companies get, the more they leverage other people's money to grow and scale. So surprisingly, even if you have a $500,000 business, $1 million business, a $10 million business, a $100 million business, a $1 billion business, you are still borrowing money throughout the life cycle of that business. So reality is, if you do meet those criteria, that's where the big boys are getting money. But what if you're not there yet? What if you don't have all that stuff? Well, then there's a few alternatives, and the first of which, and easiest of which to qualify, is called cash flow financing. Now, Raven says, hey, Ty, your audio is very glitchy and broken. So let me see if I can fix that super quick here. Let me look and see here. Audio default. Let me see if I can fix this right now. Should fix it. If you still have any more audio issues, let me know, but I went ahead and switched to my best mic, so hopefully that should fix that. Okay, it's like your latency is super high and you're lagging back. Okay, okay. So here we go. All right, and Bob thinks I'm a scam. That's not very nice, Bob. Okay, so that being said, hopefully that fixes your audio issues. And again, by the way, Bob, I'm going to put Bob up here. He says, I can't put Bob up here. He said a bad word. But Bob, if you think any part of what I'm saying is inaccurate, please give us more details. We'd love to hear more. Okay, so cash flow financing options. And hopefully that fixes the audio issue. Able to kind of hear this better now. Sounds better. All right, perfect. So we got the audio issues fixed. I got to fix the default settings in Restream. I will make sure I do that as soon as we're done here today. Okay, so the first and easiest way to get money for a business is what's called cash flow financing. Now, it's called a lot of different things, but I like to call it cash flow financing because it just kind of signifies what it does. It's money you can get based on you having consistent cash flow. So if you have consistent cash flow and you can supply tax returns or bank statements and show, hey, I've got regular flow of money coming in to my business, well, then that opens up funding options. The first of which here is called revenue lending. And this basically looks at all the deposits going into your bank account, cash deposits, check deposits, credit card deposits, all the deposits going in your bank account. You're actually able to add all that up, and then lenders lend you a percentage of that money. So an example here is On Deck, and a lot of these guys out there, hundreds if not thousands of them, and they'll typically lend you upwards of 15% of whatever your annual revenue is. So if you have $100,000 in annual revenue, they'll give you 15 grand. If you have $1 million in annual revenue, they'll give you 150 grand, roughly. And you've also got examples of this at PayPal, Square, and Stripe. They will lend you money just because you run money through them. So PayPal will lend you as much as 30% of whatever running through a PayPal account. That's why I always tell entrepreneurs, look, you should always have money going into PayPal, Square, or Stripe. That's some of the easiest financing to get. 6 months in business, that'll give you upwards of $500,000 or whatever 30% of your annual revenue is, and the interest rates are really good on it. So revenue financing, great way to get money, super easy. They don't need collateral. It's unsecured. They don't look at good credit either. They actually, a lot of lenders have a 500 FICO score requirement. Some lenders have no FICO score requirements. So you can get it with bad credit. You can get it with as little as 6 months time in business, typically a year time in business. You can get it without collateral. Some of the easiest money you're going to qualify for. Now, a sister to this is what's called an MCA, or a merchant cash advance. And the main difference between merchant cash advance and cash revenue lending is, now an MCA is easier to get. You can get it with 6 months in business. A lot of revenue lending lenders have 12 months in business. You can get it with $5,000 a month in revenue. A lot of revenue lending have $10,000 a month in revenue. So it's easier to get a cash advance, but the drawback is the lender won't look at cash deposits and check deposits. They'll only look at credit card deposits. So all they're going to do is lend you upwards of 15% of your annual revenue that you process through credit cards. They're both fast money. You can get them in 72 hours or less. It's easy to qualify. You don't need collateral. You don't need good credit. You're still able to get approved. So these are some of the fastest, easiest ways for you to actually have the ability to be able to come in and get money. Now, beyond that, the other nice thing is, like I said, they're flexible on credit. You want to have your business set up the right way. Today's not talk about fundability, but you can look at our YouTube channel. So we talk about this a lot. This is how you set up your business where you're reputable and you're credible. Okay. And again, you're going to have consistent cash flow for 6 months to be able to get into this kind of financing. So if you have that fast, easy money, all you need is 6 months worth of revenue. If you don't have that yet, then just know that's your next step. Like 6 months of revenue, that door opens up for you to be able to come in and get cash flow financing. Now, let's talk about credit financing. Credit financing is really good for startups because startups don't have cash flow yet. We don't have like bank statements that show revenue, and we're pre-revenue is what we call it in the venture capital world. So what we need here is we need to be able to focus on a strength other than cash flow or revenue because we don't have that yet. And typically the strength of credit is what it sounds like, it's credit. And there's two kinds of credit we can rely on. First of all, we can use personal credit to get money. So for example, there's a credit program called Credit Line Hybrid. And with Credit Line Hybrid, we're able to get upwards of 150,000 in credit lines as a new startup business. And all I need to get approved is good personal credit. I should have a 700 FICO score, or I can use a guarantor. I can use my mom or my dad or brother or sister. I could use a family, another family member. I could use a friend. I could use somebody, a potential investor into the business. There's a lot of different options, but I just need good credit of myself or who's willing to sign as a guarantor. And if I have that, then I'm able to get all kinds of credit lines just using credit to be able to qualify. Okay, now this is nice because it's unsecured. You don't need collateral. You don't need cash flow, so you can get it for higher risk businesses. You can get it if you're newer in business as well. So really good way to be able to get money using your credit or somebody else's if I don't have consistent cash flow yet. Okay, now what if I don't have good personal credit? Well, I'm still able to actually come in here and be able to qualify. I have a little bit of my mouse here. Let me see where my mouse. There it is. So now the other option is, and this is what I talked about, Credit Line Hybrid. So with Credit Line Hybrid, you're able to get $150,000 of credit line, 0% rate. So anytime you see no doc financing, it's easier to get. You don't need bank statements. I don't need tax returns. It's how I can get this without revenue because, again, I don't need to supply any documentation to actually come through and to be able to verify my income. Now, another option here are term loans, fixed monthly payments. So if I have some revenue and better credit, well, then I can start to get longer term loans, 3 years, 5 years, nowhere near the 20, 30 years I get with SBA, but I'm still able to come in here and get a little bit longer term financing. Now back to cash flow, because I forgot to mention, if we look at the first way to get cash flow financing, there are also credit lines there too. Balloon box. There's a lot of those options where just because I have 6 months worth of consistent cash flow, I'm able to get credit lines there too. Now back to credit-based financing. With consumer credit, a lot of different options with term loans, Credit Line Hybrid, where I can use good consumer credit to be able to get approved. Now the second side of credit financing is business credit. So maybe my consumer credit isn't that good and I don't have cash flow. Well, that's a good option to build business credit. So I often tell entrepreneurs, look, if you have bad personal credit, you need to fix that. Like no matter who, if anybody tells you it's not important to getting money for your business, it's always going to be important to getting money for your business, especially SBA loans. So you have credit issues, which a lot of entrepreneurs do because like we take all kinds of risks to get to where we are and work on fixing that stuff. But the other thing you should be doing is building business credit because business credit is what tells lenders our business can pay its bills on time. So if they look at my personal credit, it's a little banged up, but my business credit's good, then they say, well, look, you obviously, went through some hiccups to try to build the business to get to where you are. But now I can see the business is paying its bills responsibly. So they're more inclined to want to lend the business money when the business has its own credit history, proving it can manage its bills responsibly. So if you have damaged personal credit, building business credit is an absolute must because it's what helps you offset the damaged personal credit. And if you have good personal credit, well, then you're going to still want to build business credit because it's what gets you away from personal fees. It's what gets you away from liability, personal liability. But don't get me wrong, for many years, maybe decades to come, you still may have to do guarantees, loans, and credit lines. A lot of financing that's probably still going to require guarantees. But there's a lot of money you're able to get. The more you build that business credit profile, the more kind of financing you can get without guarantees. So we were actually sitting here talking earlier and said, hey, look, I need to get, Jeffrey said, I need to buy a Sprinter van. How do I get to buy a Sprinter van? Well, you're actually able to use good personal credit to be able to qualify for money in your business name to be able to actually get the financing you need for a Sprinter van. You're also able to come in and business credit and use your established business credit profile to get you financing for a Sprinter van without a personal guarantee and without a personal credit check. So no matter how bad your personal credit may be, if you build business credit, that's two options right there where you're able to actually come in and get that Sprinter van where without the personal guarantee and credit check, just because you build your business credit. Okay. So
again, the nice thing is you're able to actually come in and be able to qualify for term loans, be able to qualify for credit line hybrid if you have good credit, be able to qualify if you don't have these for business credit. And business credit opens up high limit credit cards at vendors, stores, Staples, Office Depot, Costco, Sam's Club. You get it almost every retailer. You could also get Visa card, MasterCard, auto financing, all without a guarantee, all without a personal credit check. So that's the kind of financing that you're able to get when you build business credit. So now we've got money we can get based on cash flow being consistent. We've got money that we can get based on good personal credit. We've got money we can build business credit and be able to get as well. So it gives us about 3 solid avenues to get money. And now let's look at the biggest bucket of financing. So if we look at all money that exists, everything in the business space, we've got 2 sides of money. We've got debt and we've got equity. Equity are angel investors. They're venture capitalists, people that will give us money in exchange for equity ownership in our business. They want us to give them shares of stock to have ownership interest in the business. Then we've got debt financing. These are loans and credit lines and credit cards, right? So if we look at debt financing, we now know it's either based on having good cash flow or good credit, or now we bring in that third, which is collateral. Now remember, we started today talking about SBA loans, and SBA loans means all of these: credit, cash flow, and collateral. Then we jumped in only using one of those streams: cash flow or personal credit or business credit. And when we look at these buckets, collateral is the biggest bucket of type of finance that's out there because there's so many types of assets that you can serve up as collateral. So if you have collateral, what's nice is, first of all, you get the best interest rates. Absolute best terms I've ever seen in 20 years of helping people get money comes from using something as collateral to be able to borrow. And the reason for that is that if you default on that loan, the lender has some kind of security that can go pull back that collateral and get the majority of their money back. So with that kind of security, they're more inclined to give you better rates because the risk is lower. And always remember that the interest you pay is based on risk. So anybody that comes to me and says, I don't like the interest rate, I'm like, well, then you have to lower your risk. Here's what creates, right? Shorter time in business, high risk industries, bad personal credit, no credit being established, mismanagement of money in your business bank account. Those are the kind of things that can account for higher risk. So collateral offsets risk, and lenders care about way less if there's something they can go call back and take if default. Okay, so again, having a specific asset you pledge is collateral, one of the easiest ways to get really low rate financing. And if you have assets you could use as collateral, well, then you have a chance of getting the best that are out there. Now, there's a lot of things that fit in this bucket. And so now we look at everything. It's an asset that we could borrow against to get money, or an asset we could buy to actually use as collateral to be able to get a loan. So an example there, equipment, inventory, a Sprinter van. Well, there's equipment financing that's specifically for that purpose. There's auto financing specifically for that purpose. So depending on the kind of vehicle I want to buy, I can either use equipment financing or auto financing to buy that thing. And there's auto financing without a personal guarantee if I built my business credit. There's auto financing in my business name with a personal guarantee if my business credit's not established. And then we also look at equipment. There's big rig trucks, there's tractors, there's Sprinter vans. A lot of these commercial use vehicles are also in that category of equipment. So we can get equipment financing to buy that specific thing that we need. Now we can also do the opposite. We can have that thing we own free and clear. Commercial vehicle, a regular vehicle, a piece of equipment. We could borrow against that asset, that vehicle, that equipment that we own free and clear, and we can get money there too. So there's all kinds of financing we can use to buy assets, vehicles, houses, commercial real estate, and financing we can get for that purpose. We can also borrow against assets we already own. We could do refinances on mortgages and take cash out. We could come in and be able to borrow against equipment, borrow against vehicles to get money. We also look at like stocks, bonds, 401ks, or IRAs. Those could be served up, and you can borrow as much as 100% of a 401k or 90% of the stocks. And then it doesn't even have to be yours. Maybe stocks. And instead of him giving you $50,000 to start the business, you could use his stocks as collateral and get a 5% interest line of credit. You're also able to come in here and use account receivables. The fact that your customers pay you on time, or maybe you need to go get purchase orders fulfilled, or Maybe you're an insurance company and you're building a book of business. You want to use that book of business as collateral. Maybe flipper, and you want to get the money you need to buy the house and fix it up, flip it. All of those are examples of where you can use at collateral or assets as collateral. One of the best programs I've learned about in 2022 is basically using online e-commerce inventory as collateral. So let's say you're selling stuff on Amazon. You can get the money you need just to buy the stuff you're selling on Amazon. 100% of what you're selling on Amazon or wherever else you are selling it, you're able to get 100% of the money you need to buy that stuff. And there's private lenders in there. There's crowdfunding for that purpose. So the question becomes, what is your asset? Is it inventory? Is it equipment? Is it vehicles? Is it real estate? Is it like a financial instrument, stocks, bonds, 401ks, IRAs? Any of that stuff can be pledged collateral to get you low rate financing. Now keep in mind here, if you have one of these things, you don't need the others. So if you have cash flow, you don't need good credit or collateral. If you have good credit, you don't need cash flow or collateral. If you have collateral, you don't need cash flow or good credit. So that means I can come in as a startup with bad credit and leverage any kind of asset and serve up as collateral and get money. So a lot of times people say, well, startups can't get money. That's actually, if you really look statistically, the vast majority of funding options that are available for small businesses, most of them work for startups. The ones that don't are the ones that are based on cash flow. SBA loans, merchant cash advances, cash flow financing, PayPal, Square, Stripe. That stuff won't work because it's all based on cash flow. You don't have it. But everything in the collateral-based category, everything in the credit-based category, the business credit, all of that works for brand new businesses as well. You just have to know where your strength lies. If you know what your strength is, that really opens up the best option. So where do you find the perfect business loan? Well, that's where you really have to look at which of these things you have. So we got to look and see, where is our strength? Do we have consistent cash? Do we manage our bank account responsibly for the business? Have good personal credit or maybe good business credit? Maybe I want to build good credit. Do I have collateral? Do I have some kind of assets that can be served up as collateral? That is your strength, and that is a loan program you then want to pursue. And all of these, you got to build your fundability. I'm not talking about that today. Plenty of training on YouTube all over about fundability that talks about just setting your business up and structuring your business where it's credible, where it's legitimate, the entity set up and a business website and a phone number and an address separate from the business. You got to build the business credibility. That's very important to getting any kind of money. But if you've done that, then that opens up all of these other types of financing that can work. You just really want to focus on where your actual strength is. And Tara says, Ty is dropping gems. This demystifies SBA loans for me. Thanks. I appreciate that. And I'm glad that you're getting good insight, because this is the purpose of graduating. That's what we want for you. What we want is for you to get the money you can get now that's perfect for your needs, and then graduate to better and better and better loans. And hopefully what you're taking out of today is that if you have a strength, cash flow, credit, or collateral, you can get money now. If you don't have a strength, well, then you can rely on somebody else's credit as a guarantor, somebody else's assets like stocks, bonds, 401ks, IRAs, equipment to leverage against their asset, or you could build business credit. There's plenty of options if you have none of these that can work for you as well. And the next thing is you want to try to get some kind of asset that can serve as collateral. Let your customers pay you on terms and accumulate account receivables, for example. The more of these assets you have, the more low rate financing you're able to get. And of course, the ultimate goal is SBA, where we have good personal credit, good business credit, cash flow, and collateral when we have all of those. So if you want to know what you can get right now, then all you have to do is really take two steps. First of all, or one of two steps. First, grab our free guide. We have 27 different ways to get money mapped out in our guide at creditsuite.com/27 killer ways to finance your business. You can see which of those actually work for you. The next thing is you can either give us a call, and I'll give you our number shortly, or just schedule online at creditsuite.com/consult finance assessment for you. We'll tell you, hey, what's your unique situation? Here's all the money that you're able to get now. And it costs you nothing for that assessment. We'll even do a fundability check. We'll go your business credit reports with you. We'll give you tips and tactics to build your business credit as well. And if you got value from today, then make sure you check creditsuite.com/toolbox. I'm giving away about $400 worth of tools that will help you get money for your business 100% free. All that you have to do is, if you got value, share our next live stream. And by sharing our next live stream, then you're actually able to come in and get like $400 worth of cool stuff that helps you get money. A lot of entrepreneurs at the same time. So don't forget to give us a call for the free finance assessment. Value, like and subscribe at the top right of our page, creditsuite.com, on all social channels where we have daily tips on some of the channels. We've got a podcast with 700 episodes plus. At this point, you can listen as you go. You can listen to watch 1-minute videos, watch 90-minute trainings on YouTube that map out everything you know to be able to be successful. So I'm going to go ahead and wrap up. Thank you very much for tuning in. I really appreciate it. Make sure you go to creditsuite.com to like and subscribe at the top right of our page and give us a 7-600-2487 for your free finance assessment, because a lot of business owners call, don't think they can get money, and we are quickly getting in there and helping them understand there's even multiple types of funding that they can get. So maybe that's you. Only one way to know. Give us a call for that free finance assessment. Thanks again for tuning in. Thanks for engaging. Tell me where you're from and giving me some feedback here. I really appreciate it. I look forward to seeing you on our next trade where we talk about more cool ways to get the money you need to start